Hey folks, Dan here. We're back at the White Wall of Truth in order to talk about some sort of trading psychology, some ways that I think about different things today. Hopefully, this series is interesting to you. If you have any ideas on sort of things that play on your mind or mentalities or anything like that that you struggle with, and you want to drop it in the comments below, that would be cool. I'm looking for other ideas. Don't want to just be sort of like, these are things that prey on my mind, but obviously that's what I'm going to start with. And if there's ideas that you have, feel free to share them. And if they resonate and I have thoughts on them, I'd be happy to kind of make a video on that. But today I wanted to talk about leaving money on the table. So this is the sort of thing where it's like, I didn't buy at the exact bottom and I didn't sell at the exact top, and I feel really not good about that. So I've certainly struggled with that a lot as well, where I've tried to shift my overall mentality, and I'll just start with that, and then I'll talk about a few different scenarios and situations that in which this plays out. But I've tried to switch my thinking to the idea being I want to catch most of the move most of the time. And this sort of blends with my overall strategy of like, I want to be growing an account for a long time, right? So it's not a one trade thing. It's not even 100 trade thing. It may not even be 1,000 trade thing, right? So all of these trades are drops in a bucket. And so if I think about keeping my wins bigger than my losses generally, and having more wins than losses, if I keep my wins bigger than my losses and I can win 51% of the time, then I can probably grow the account. So certain things just come down to math, and going alongside of that is this idea of like, if I can catch most of the move most of the time and not try to beat myself up and be so crazy about I needed to buy the exact bottom. I'm going to buy at logical points. I'm going to buy when it's at a support level. I'm going to buy, I'm talking about going long here. I'm going to buy when it's at an EMA level. Or an MA level. Whatever it is that I'm using to gauge the price action on the chart, I want to buy it as close to that support level as possible. And then selling it as close to a resistance level as possible, or selling it when the indicators move in a way that I've decided, okay, this is how I'm going to take my profit. For example, today I sold Pfizer early in the day, and I took about I can't remember, 50, 60% gain on it or something like that. And later on in the day, it continued to just skyrocket. But I was okay with that because the reason that I took my profit at that time was twofold. One, I had to go do other things. And so that's why I think having a little bit of being a little bit like gentle with yourself, and it's a weird way to say it, but being a little bit forgiving of yourself when you have other things to go do, right? If you're not a 100% full-time trader who's able to just watch the candlesticks minute by minute by minute by minute by minute, day after day after day after day, and you have other things to do, you may have to just sort of like time your trading around that. And so that was one of my factors today. I had other stuff I had to go do, and I was watching the EMAs. If you've seen my setups, right now the setup that I'm using is the 12 EMA, the 34 EMA, and the 50 EMA. And what I saw was the price came down a couple of times to test the 34 and it held, and then it dipped down to the 50 and it held, but then it started to give way. And then the 12 EMA crossed below the 34, and I had already set in my mind, okay, I would like to lock in this profit because I need to go. But what I'm going to allow myself time for is to see if this EMA throws a bearish cross. And it did. That's that 12 crossing below the 34. And I took my profit, right? And like I said, it came down quite a bit further than that. At that time, it came down all the way to the VWAP. And so at that moment, right, at that very moment, it looked like it was a really good exit. And it was. Later in the day, if I had been okay holding this the entire day, which just wasn't my strategy with the trade, I wanted to get out today, I could have picked up a bunch more percentages probably. I didn't go back to look exactly, but that's part of the mentality too, is right, not going back to check. It's I think if you don't have that expectation of yourself that you're going to catch the exact bottom and that you're going to sell at the exact top, you'll do yourself a ton of favors. And just to repeat it, I think about catching most of the move most of the time. Sometimes I've been lucky and I've caught the exact bottom, but that's because that's not been for any different strategy than when I don't catch the exact bottom, right? It still is because I was buying within a time frame that I was able to be trading, and it was at a level that made sense to me, near a support level. And so yeah, those are basically the criteria that I think about, and I, like I said, thinking of every trade as sort of like a drop in the bucket, not over risking, I think also helps with these things too, right? If you put way too much of your account at risk in any particular trade and it goes against you, that to me was more of a sizing issue. You took on too much size relative to your account, and so you've backed yourself into a corner where you need to like make this great trade or not, and if you don't, then it can feel really bad, and like you really missed an opportunity. But if you have, if you've sized it correctly and you have the right percentage of your account in there and you lose all of it, right? My goal is to always say, okay, if all of my positions go to zero, I can definitely rebuild my account because I'll still have X amount in cash that I can just bring on new trades with. And I think that there's value in sort of like, I think all of these things, at least for me, kind of play a factor in never feeling like I have to buy at the exact bottom and sell at the exact top. And if I leave a bunch of percentage points on the table because of that, because I sort of like got it somewhere in the middle, then I'm okay with that. Also, I think like trading over time will just sort of like humble you, where I always expect when I enter a trade that I'm going to be red on it like pretty quickly. But it's testing the hypothesis too. So this is another thing where it's like, if you're taking your entry point close to a support level, for example, and I have a stop loss a bit below that support level, then if it goes against me, I know that really quickly, right? And I can exit, take my losses, but limit those losses, keep those losses small. And if I make a mistake and something gets away with me and I take on a big loss, then I just need to like rejigger. If it was a timing issue, if I didn't account for something in the chart properly, if I ignore, usually it's because I ignore my rule. I set a stop loss and then I don't stop when I don't take that loss when it hits it. And that has, I don't think, ever worked out for me. Maybe sporadically, but almost never. And so I think sort of like building these rules, following them, thinking of sort of the long tail of things, thinking of catching some meat on the bone, but not worried about catching all of the meat on the bone. It's just you're putting yourself in an impossible situation if your expectation is that you always catch the bottom and that you always sell at the top, and that you will just time it perfectly. I think I think you're setting a trap for yourself if you do that, and you're just going to frustrate yourself and probably skew your mentality in such a way that you're actually going to trade worse in the long run. So this is for me, and if any of this resonates with you, cool. If not, I definitely understand. But this is just me wanting to share a bit of that idea, because I see people lamenting a lot about, oh, I bought it too early and then it dipped more, or I sold it too soon. That's, I feel like, the most frequent one. I sold it too soon and I could have gotten another 10% or 20% or 50%, whatever it is. But I look at it as gains are gains, losses are losses. And in total, I want the gains to outpace the losses, both in quantity and as a percentage. Bigger gains, smaller losses, more gains, less losses. Even if they're very close to each other, the sizing makes a big difference. All right, that's all I got for this one. I hope you enjoyed the scenery, the setting, and I appreciate you watching. Leave me an idea if you have one. I could use them. All right, folks, I'll see you in the next video.